The US Federal Reserve surprised markets this week by not announcing a reduction or tapering of its asset purchase program. Joining me now to discuss this is Fred Neumann, Asia Chief Economist at HSBC. Fred, since tapering first became an issue back in May, Asia's been hit pretty hard. Can we now all just forget about the last 6 months?
Momentarily, yes. So the Fed was very reassuring to investors in emerging markets who had sort of rode the wave of easy money that the Fed was providing. And since that will now continue for a little bit for a while longer, I think emerging markets in general, and Asia in particular, should see some relief, at least in the short term.
I mean, India and Indonesia are probably the sort of worst hits in the region. Have they now dodged a bullet? I mean, have they avoided some of the economic problems that were brewing?
I think it buys them some time to really put the structural reforms in place. So we had seen already in the run-up to the tapering decision yesterday a stabilization in financial markets. The currencies in both of these economies strengthened, for example. There's some signs of investment already coming back. What I think the tapering or non-tapering decision does is essentially lengthen that window of opportunity where policymakers can apply the structural reforms to reinsure investors for the long term. So it buys us time, but it doesn't really solve anything fundamentally.
I mean, the economic news out of the US and out of Europe seems to be improving, whereas in Asia it's perhaps getting worse. China back in May was a big worry. I mean, during the problems of the last 6 months, how much of it was due to the Fed and how much of it was due to sort of local Asian problems?
I think it's a combination of both, really. And in some sense, the taper worries had triggered the sell-off in Asia because there were, but the underlying worries were already there. So the tapering just kind of sparked the fire, if you will. Now, with China having re-accelerated on the back of a stimulus, that also provides a lot of reassurance for Asia. But it's also important, I think, to differentiate within Asia. So a market like India, for example, isn't that dependent on China. Here, tapering is much more important than, say, in Korea, where tapering doesn't matter as much, but China is much more important.
Presumably the Fed isn't going to keep things this easy forever, and there are still quite a few doubts about China's economy. Has this week's announcement or lack of an announcement simply delayed the inevitable?
To some extent, yes, and in fact the Fed still signaled that it might end QE altogether by the summer of 2014. So in essence, we have not seen a material change in the Fed stance here. It's just a short-term delay, if you will. And that means that the underlying problems that Asia faces still remain, that the window of opportunity just opened a little bit, but it hasn't kind of bought us enough time necessarily to avoid addressing all of the challenges that Asia faces.
I mean, we have a slightly clearer picture now of what the Fed's thinking. What about the Bank of Japan? It's obviously a bit closer to home here. How has the Bank of Japan's asset purchase program been impacting Asian markets, and how is that likely to play out going forward?
Well, historically, the Bank of Japan always had a major impact on emerging Asia in terms of printing money or cutting interest rates, that immediately transmitting into the rest of the region. Lately, we've seen investors get very impatient, asking where's the effect of the Bank of Japan easing on the rest of Asia. But I think it's important to remember that the BOJ only just started, and kind of its effects were overshadowed by tapering fears. Now that tapering is coming back off, or the fears are receding, the Bank of Japan easing impact on Asia should be much more felt in the coming months. And the BOJ is in effect printing as much money as the Fed is doing under QE3. This is an enormous stimulus for the rest of the region, which will carry us through well into next year.
Fred, thank you very much.
Thank you.
And you can read plenty more on this at ft.com.